Welcome to this issue of the AlgoTrades Inner Investor Monthly Newsletter. This is the August issue, and let me just jump into a couple things really quick, and then we'll get into the analysis. Now, over the last more or less month, we've been talking about a new release of the AlgoTrade system, an improved version of the robot trading system that is going to be upgrading all traders' accounts. And I did talk about this in our monthly newsletter. Now I'll put the link below in this video here for you to go and download and read this if you haven't yet, so you can figure out see what's going on. It's pretty exciting. The new improved version of the robot. I'll cover that stuff after I go over this analysis. So let me just go over the current market. I'm just going to look at the charts here, and we're going to just zoom in real quick. Looking at the overall major trend. Now this is the monthly SP 500 chart. Analysis is pretty straightforward. You can see these rising support trend lines. You can see divergence in overall strength of the market. And when you get divergence and you get a trend line break, especially after a multi-year run that we've seen repeatedly, usually you see the market crack to the downside and we start a bear market. Most bear markets on average last around 18 months or so, so I wouldn't be surprised we see a year or two of lower prices going forward. It has yet to really confirm, and we haven't really kick-started a bear market yet because we haven't broken some key short-term support levels, but we're very close to seeing that happen. At this point, though, the overall market remains in an uptrend, in a bull market. Now, there is a potential here if we take a look going way back in time. This is all the way back to the 50s. You can argue this recent 10 years we've seen here is very similar to what we've seen back here. We've got some pretty world-changing things happening, countries going bankrupt, currencies, everything going kind of is imploding on the market, and we could easily see the market correct here. The question is, are we going to see a massive correction where the SP 500 comes down to the 800, 600 point level? We see a massive change in the financial industry in terms of baby boomers, retirement funds. This will be very difficult on the economy if we see that. Or are we going to see something similar to what we saw back here in the early 80s, where we see the market kind of sort itself out, it gets rebalanced, the financial systems in countries, everything kind of gets sorted out, and then we see a super cycle to the upside, and we see a massive run like we saw here from the 80s all the way up into 2000. It really doesn't matter what happens here. Ideally, a smaller pullback and another super cycle up would be the best for the economy, but we are trading trends, smaller trends than this within it, so it doesn't matter. We can profit from whether it just is a small correction or a big correction. Believe it or not, we can make a lot more money even and quicker to the downside if we do get a bear market. But again, it's not good on the economy, and it won't be good for family and friends and other things that happen there. Now, if we take a look, I'm just going to, the main chart here to look at is this lower chart here. This is the factory orders, courtesy of Zero Hedge. When we see factory orders start to go red, start to go negative, we've seen bear markets in the stock market take place. And we've seen this happen several times, and really we've kind of, it looks as though we've started a pretty serious one now. The market, the economy seems to be very tightening up here. People just aren't wanting to, they're not wanting to spend money. Everybody's tightening up. Businesses continue to lay off people. And we're seeing contraction, and it's just a matter of time before the market kind of kicks in and the stock prices start to show the declining orders and potential for business sales down the road. So that's an early warning sign that we're seeing a bear market take place. Now, if we take a look at the NYSE, I'm going to zoom out a notch here. It's formed this bearish rising wedge, which it's broken down from in the last month or so, and we continue to chop around. Now, overall, the Dow, the SP 500, the NASDAQ, and the Russell 2000, they're all still holding up above critical support levels. The NYSE is still holding up, although it has a bearish pattern here. I think we could see it trade above this $10,000 mark for a while, but when it breaks below that level, we'll probably have seen the major moving averages roll right over, and we'll actually be now in a bear market, and then we have some big opportunities to the downside to make some money as prices fall, usually 3 to 5 times faster than they rise. So we can make a lot more money in a fraction of the time of a bull market. Let's just see what else is down here on the chart. Looking at the market internals, the top chart here is the percent of stocks trading above the 200-day moving average. We've been seeing this erode. Fewer stocks are trading above their 200-day moving average while the stock market continues to go up, which means the market has has been losing momentum. There's just not a lot of muscle behind this push. Stocks aren't pushing the market really higher. It's just a handful of stocks holding the entire market up, and eventually we're going to see a big rollover here and a crack and probably the start of a bear market. Now, it's interesting because the stock market's been going higher, but the most stocks have been going lower, and a lot of investors don't really grasp the concept of when this starts to happen. They see the stock market going higher, yet they see their portfolios losing value, and they wonder what the heck is going on. And that's simply because a lot of investors will be holding individual stocks, and most stocks have been going lower while the indexes have been going higher. So they're holding a basket of stocks that are all losing value while the index continues to go higher. And that's an early sign that a big bear market is coming, and of course the average investor is going to be left holding the bag when the stock market rolls over, holding stocks at these high prices, and they're going to ride them down for substantial losses. So you have to have an exit strategy. You need to have a strategy that allows you to profit in a falling market, and if you don't understand any of that stuff, you should figure out a way to take advantage of it, because the best opportunities are during a bear market while the prices are falling. That's about it for that analysis. Now I'd like to jump over to our the AlgoTrades trading system. This is the original trading system that we've had going here. In 2014, we did around 16% return, not including commissions. But overall, you can see how the system performed. Now, if we look at this chart here, the green line is the SP 500. The blue line is our trading accounts. And of course, as the market was trending higher with nice steady trends, we saw our accounts grow substantially. And then the market started getting this heavy rotation. Our account continued to hold up, but once the market started to go sideways with this choppy price action, you can see the SP 500 has been trading sideways here for about 8 months in a very tight range. I'm just going to move my cursor up and out of the way here. And of course, as the market kind of would rally over here, we'd see a strong move up. The system would want to get long, and then the market would roll right back over and go into a short-term downtrend. And this happened several times. It just chips away at the account gains. You get chopped up until eventually the system identifies that it's not trending anymore and it goes into cash. Did have a little trade here where the market was starting to break out, getting into a trend. Had a small winning trade there a couple of months ago, but it's fallen right back into this sideways chatter where the system doesn't want to trade. Now, the recent news that we've been releasing and talking about here is about the improved version of our AlgoTrades system, which is very exciting to see it trading live and performing. Let's just jump over to those charts real quick. Now, this is the original, or sorry, this is the new and improved swing trading strategy. This is the last 15 trading days in the market. So this is a swing trading strategy that prefers a rising or falling market, not a sideways chatter that we have been in. But you can see here the new money management rules that we have in place. Our losses, we do get several more trades, but the system identifies and can reduce our losses very quickly. When we do get into a position that has some follow through, you can see our winning trades are much larger. Now, over the last 15 days, this strategy, our swing trading strategy, has generated around $1,700 in profits, which is great considering our original strategy hasn't done a single trade during this time frame. So a nice gain there. Now, if we take a look at the rotational strategy that we've added that benefits strongly from this rotating market, you can see the equity curve on this shorter term time frame that trades this choppy sideways market. We've seen around $6,700 in gain in this system in the last 15 days. And if we just look at the trades, you can see we've got a few losers in there, and our winners are fairly substantial. Again, it's pocketed around $6,700 profit, not including commissions aren't added in there yet, but just goes to show you how the system does during that trading time. Now, if we combine those two systems, which gives us our new and improved AlgoTrades system, we get a very smooth equity curve where it continues to slowly grind its way higher and move up. And we can see this is more or less all the trades kind of combined and condensed as they play into each other. And you can see we've had a nice run of wins, and over the last 15 days alone, the system has generated roughly $8,500 in gains before commissions. So let's just jump over to the robots so you can take a quick look at what's going on. So this is the swing trade, the new and improved swing trading strategy. Again, both these strategies are embedded into the new improved V2 system. So you can see the system got long, got chopped up with the trend kind of. These are the small little trades that we get where the market gives us some false signals, and we flip directions of trades. Again, some chatter over here, in and out, in and out. And of course, during this volatile market condition, with strong rally, strong sell-off, big rally again, the system generated around $1,700, just over $1,700 in profits, where our original system didn't take any trades at that time. Now, if we take a look at this is more or less a 10-minute strategy that plays on momentum. Let me just zoom in a little bit more here. I'll just actually delete this chart so I can fit it all in here, and I'll pull the bottom of the chart up so you can see the dates here. So if we take a look at the 10-minute strategy, it trades it's the same strategy but designed for shorter term time frames. So it's playing aggressively to the upside, to the downside, to the upside. We've got a lot more trades through this kind of rotational time, and the system has performed exceptionally well. So when the market, right now, this rotational strategy, this shorter 10-minute kind of time frame strategy, when it is the one doing all the heavy lifting. Again, it's done around $6,700 in gains in the last 15 trading days. But when we get into a trending market, this system will actually have its trades will drop off. Instead of having, say, 1 to 5 trades a week, it will drop off to maybe 1 trade a week or less, while the swing trading system will be into larger positions that go much deeper into the money, so we can have larger gains. And again, the nice thing about these two systems is that this shorter term time frame actually does counter trend trades. So we could be long on the swing trading system, say we're long 2 contracts, and then say the market rolls over or continues to sell off after we get in, and say the market drops 15 points or something on us, with a potential, say, $1,600 drawdown on that position. Well, the short-term strategy will actually be jumping in as soon as that market starts to reverse, and it'll actually be short 2 contracts. So you end up with a net kind of flat position in our accounts. And of course, as the market drops and falls, this is kind of what we saw here. The market drops and falls. This 10-minute strategy eventually gets out of the short, locks in $1,500, $1,600, $1,700 in gains. And then our investing strategy or swing trading strategy, which is still long, ends up being long 2 positions, and the market comes back up. And what it does is it really reduces the drawdowns, the intraday fluctuations, big sell-offs in the market. If we happen to be long, the short-term strategy can negate most of those losses at times, so you don't even see the drawdown in your account. The account goes flat for a while, and then you locks in gains, and you end up long the way the two systems run together. So it's a very powerful combination of systems. Anyways, hopefully this kind of explains kind of what's unfolding on September 1st. This new robot version, this strategy here will have all the trades done, you'll be automatically upgraded in your account on September 1st, and the new trading strategy going forward. So anyways, take care. If you want, go to algotrades.net to learn more. Bye-bye.